Good morning and welcome to Market Cafe with me, Ankur Mishra and Kanishka Sarkar. In next 1 hour, we'll bring you all the news and updates that matters to you before opening of market. And in this era of volatile news flow, we will break it down for you. But let's get started with US market first. Good morning, Kanishka. It was day of green in US.
Good morning, Ankur. Absolutely. All the three major averages did end on a positive note yesterday. The Dow added more than 300 points. The S&P 500 that posted roughly 0.9% of advance, whereas Nasdaq Composite that jumped 1.5% in trade yesterday. Now, this investor sentiment was aided by cooling oil prices, with the Brent and US WTI settling more than 1% lower yesterday. However, the US stock futures are currently down amid hostilities between Iran and Israel that have entered a fifth day now. This with the US President Donald Trump writing on Truth Social that everyone must evacuate Tehran, as Iran should have signed the deal when they were asked to. Meanwhile, Trump is also leaving the G7 summit in Canada a day early due to the situation in the Middle East. On the economic front, investors will today watch for May's retail sales data. The main event this week will be the Federal Reserve's rate policy decision, which is due Wednesday afternoon. But Ankur, looks like crude up move is back again.
Yes, crude up move is back again. As I mentioned earlier, it's a volatile news scenario. Even the Dow futures have now slid up around 200 points after rising yesterday. And if you talk about crude, yes, yesterday there was a fall, but again WTI is settling around $72, and if you talk about Brent, that is around 73.50. So all the de-escalation news which was flowing earlier, it turned out that there was a reverse kind of a trade which happened as far as crude is concerned after a scenario where the escalation is actually continuing.
That's right. Let's get tracking these global stories in detail. Now, tensions continue to escalate in West Asia even as Iran calls for truce. Now, an Israeli airstrike hit Iran's state broadcaster live as the conflict between the two nations entered its fifth day. Now, footage showed a news anchor fleeing mid-broadcast as the blast struck a dual-use communications hub. Now, Iran said that 224 people, mostly civilians, have died in these attacks, whereas Israel has reported 24 civilian deaths. Now, as missiles continue to fly, Iran is urging Donald Trump to press Israel for a ceasefire, offering fresh flexibility on nuclear talks in return. Now, the IAEA has confirmed that major damage to Iran's top uranium enrichment facility has been done. But this conflict has had one major consequence, and that is affecting the global economy. Crude prices have been on the boil since Friday. Ashesha is here to tell us what the commodity is heading towards now.
Well, yes, Brent crude has surged nearly 2% yet again today morning to trade near that $74.5 per barrel mark. Remember, yesterday in the morning it did cross that $75 per barrel, but later, by the end of yesterday's trading session, it ended nearly 2% lower on signs of de-escalating tensions in West Asia. But remember, after US President Donald Trump said and he ordered evacuation of Tehran, again we have seen a spike in oil prices, and it is now nearing that $75 per barrel mark yet again today morning. Now, as far as crude infrastructure is concerned, remember we have been highlighting the importance of the Strait of Hormuz for the last several trading days, and as of now there has been no disruption in supply, and Iran, although they have in the past threatened to block supply, remember Strait of Hormuz transports, or this particular waterway helps transportation of about 1/5 of global oil supply. So any disruption in the Strait of Hormuz is likely to impact oil supply globally, which could lead to surge in prices yet again. But so far there has been no impact on this waterway. Transportation continues to be as usual, and hence there are fears of supply disruption, but as of now there is no actual implementation or any blockage in this particular waterway. But yes, today after US President Donald Trump ordered evacuation of Tehran, we have seen a 1.5 to 2% spike yet again in Brent crude, and it is currently trading at that $74.5 per barrel mark.
Thanks, Ashesha, for those details. Meanwhile, Trump is cutting short his G7 summit visit in Canada, and this is due to escalating tensions in West Asia. The White House confirmed he was leaving after evening's dinner with the world leaders. Trump had earlier urged evacuation of Tehran and criticized Iran for not signing a nuclear deal. He also warned that Iran cannot have a nuclear weapon. In fact, he said the dramatic post on Truth Social comes as US military assets are being repositioned. The summit has been strained by Trump's support for Russia and refusal to back a joint G7 statement on de-escalating the Iran-Israel conflict.
All right, then moving on, in a rare high-level call, the European foreign ministers urged Iran to resume nuclear talks with the US and avoid further escalation with Israel. But Iran's foreign minister responded that confronting Israel remains Tehran's top priority. France, Britain and Germany, who are parties to the 2015 nuclear deal, are pushing for diplomacy even as the IAEA says Iran is in breach of non-proliferation commitments.
But what does this conflict mean for crude prices and the Indian economy? Can our balance sheet manage high crude oil prices? Abhishek Gaushan, the head of research ET Now, joins in with an explanation on the whole issue.
Broadly, after this eruption of Israel and Iran issue, we have seen a sharp rise in the oil prices. That was quite natural because of their involvement in the overall production of the crude oil. But if we decode the data, then we've found that this Iran has mere 3.5% kind of a share in the global crude oil production. But what is more important for Indian perspective is that India has already stopped importing oil from Iran almost 5 years back. So materially, we don't see a direct impact of this issue on the Indian economy. But because of this Red Sea issue or Iran has a control on the routes on which this oil transports to the Asian countries, we may see some kind of an impact on the pricing side. So net it would not have any impact on the availability of the oil, but it may have some kind of an impact on the oil prices which we have been seeing. And if we go back on the historical anecdotes, then it clearly says that historically we have seen an up to 25% kind of a jump whenever such kind of a issue happens in relation with the Iran. So the back of the envelope calculation suggests that even if oil prices will jump up to the 81 rupees, which is the 25% of the price where from this issue has been started, we could have some impact on our macro parameters, but that is quite manageable given the kind of a framework the Indian macro economy have. So the key takeaways from this issue is that, from the market perspective, is that in a near term we may see some kind of a volatility in the market, but largely market will remain in a range which would factor in the current economic and the macroeconomic fundamentals of the country. And as the time will pass on, we may see that the market will more factor in the earning growth prospects of the companies rather than that of this geopolitical issue.
All right. Thank you, Abhishek, for all that explanation about the matter. But moving on, now G7 leaders have reached a provisional agreement on a new strategy to safeguard global supplies of critical minerals, according to reports. Now, the plan aims to counter market disruptions like China's recent export suspensions and ensure fair, responsible sourcing. While not yet signed by Trump, the strategy pushes for diversified supply chains and stronger coordination against mineral shortages. Now remember, critical minerals are key to industries from EVs to defense and remain a pressure point in US-China relations. In fact, we also caught up with Manoj Joshi, is a distinguished fellow at ORF, and also Jayan Das Gupta, the former ambassador and representative of India for the WTO, on the ongoing G7 summit that was hosted by Canada. Let's take a look.
Canada has lost its major partner, which is the United States. Because of Trump, there's a problem between Canada and the United States. Canada needs all the friends that it can have. So it is reaching out to other countries, reaching out to Europe. There is no reason why it should not also reach out to India, because there are, we only look at the Canadian Sikhs, but there are Indians, there are Canadians of different areas in India who are also settled in Canada. The Indian non-resident Indians in Canada who are an important community there and can form the basis of a reset relationship.
The point is that in terms of outcomes, the G7 can only pass resolutions and point to the direction in which it would expect or an outcome. And it is for the principals involved in the matter to come to an outcome. For instance, in the Israel-Iran conflict, in the Ukraine-Russia conflict, etc. But the world, opinion, as represented by the G7 and the outreach countries like India, Mexico, Ukraine, and the others who have been invited to be at the conference, they will convey the message back to their own countries and to their other alliance partners in different treaties, that this is what we need to do to give concrete shape to the outcomes which have been delineated in the G7 meetings.
Continuing with the G7 news, Donald Trump and UK Prime Minister say the long-awaited US-UK trade deal is now official. Standing together at G7 summit in Canada, Trump declared, "We signed it and it's done," while dramatically waving and briefly dropping the signed document. Starmer confirmed the deal covers sectors like auto tariff and aerospace, though specifics of the deal remain under the wraps. The leaders hailed the pact as a new chapter in the transatlantic ties. Let's go across and listen into that excerpt.
We just signed a document. This is, sorry about that. This is it. A very important document. A little windy out here. Give me that. We just signed it, and it's done. And so we have our trade agreement with the European Union. And it's a fair deal for both. Going to produce a lot of jobs, a lot of income, and we have many other ones coming. But you see, the level of enthusiasm is very good. But the relationship that we have is fantastic. So I just want to congratulate you.
Donald, thank you very much. This now implements on car tariffs and aerospace, our really important agreement, and so this is a very good day for both of our countries, a real sign of strength. So thank you again, Donald. A really important day for both of us.
What is holding up a deal with Canada from your perspective?
It's not so much holding up. I think we have different concepts. I have a tariff concept. Mark has a different concept, which is something that some people like. But we're going to see if we can get to the bottom of it today. I'm a tariff person. I've always been a tariff. It's simple. It's easy. It's precise. And it just goes very quickly. And I think Mark has a more complex idea, but also very good. So we're going to look at both, and we're going to see what we're going to come out with something, hopefully.
All right, that's the latest coming in on the UK-US trade deal, though finer details are yet to emerge. But moving on, OpenAI has clinched a $200 million contract with the US Defense Department to deploy advanced AI for national security. The one-year deal, mostly based in the DC area, marks the agency's first formal partnership with the ChatGPT maker. Now, this follows OpenAI's December tie-up with defense tech firm Anduril. Rival AI companies like Anthropic and Palantir are also muscling into the military space as AI becomes central to defense strategy.
All right, let's also pay attention to the global cues today. In US, retail sales data will be out, also business inventories and industrial production data. While in Japan, Bank of Japan rate decision is awaited anytime soon. Remember, the two-day meeting ends today. And in corporate action back home, Hindustan Zinc to trade ex-dividend today. And in terms of other events, senators are likely to debate on tax will and UNGA summit on the Palestine state will happen today.
All right, now moving on, let's also take a look at the state of India-US trade deal. Now, India and the US are nearing the completion of the initial phase of a bilateral trade agreement, which aims to finalize the text before July 9th, according to sources. Now, India is considering concessions on agricultural products and automobiles in exchange for a 10% duty on labor-intensive goods like textiles and footwear. Sumita Karir is joining us with all the details.
That's right. Negotiations for the proposed United States-India trade agreement are in good progress, and the two sides are expected to agree on an early tranche of the pact before July 9. That's essentially what government sources told ET Now. In fact, the official also added that there is good progress, and we are hopeful that this will be done within the timelines. The official also added that United States and India are both looking at reducing tariffs, and both countries, United States and India, are looking at improving market access. India particularly is looking at labor-intensive sectors to have much better market access. Now, even as tariff talks happen between the United States and India, aluminum and steel duties that have been imposed by the United States have been a bit of a concern globally. But India's chief negotiator, Rajesh Agarwal, said that on the intended impact, he said that India does not export a lot of steel to the aluminum and steel to the United States. And on auto components, he said that there is a uniform duty on auto components for all countries. We've not seen a big dent on that. However, he stated that it will, if it's continued for a long enough period of time, then there will be some impact. And if some countries will get exemptions from that duty, then of course it may impact Indian players. Remember, negotiators from the United States were in India from June 4th till the 11th of June to discuss on a whole host of talks with respect to a US-India bilateral trade agreement. They discussed market access, they discussed tariff and non-tariff barriers, digital trade, technical barriers, legal framework, and customs facilitation were some of the key aspects that were discussed, according to what sources told ET Now.
Thanks, Sumita, for all those details. And with this, it's time to take a quick break, but don't go away. After the break, we'll discuss what is the impact on Asian markets of Iran-Israel news flow. With Nikkei, where Bank of Japan decision is expected anytime, and you can see 0.6% up before that decision. And apart from that, other Asian peers like Hang Seng and Shanghai are trading flat to positive. Hang Seng up 0.25% and Shanghai just 3 points in the green territory. While you talk about Australian markets, is also trading in green, just 0.2% up. The unemployment data is expected for Australia, as well as Hong Kong will also release unemployment rate this week. But paying attention to our own markets, Nifty implied open is indicating 25 points down. So we can see a negative kind of territory opening, which may happen today. The color may be red when we'll open after a strong performance which happened in our markets yesterday.
That's right. 25 basis point cut is what we are expecting at the opening today. But moving on, let's get you some more domestic news updates. Now, the government has set up a high-level committee to probe the Air India Flight 171 crash in Ahmedabad, chaired by the Home Secretary. It was convened yesterday. Now, the closed-door meeting focused on identifying systemic gaps and charting a roadmap for corrective measures. Let's go to Nivedana, who's standing by with all the details.
Significant development as far as the Air India tragic incident is concerned. What we're given to understand is that the high-level government committee that was formed conducted its first meeting to examine the Air India Flight 171 crash. In fact, this was the first meeting of the committee, which was chaired under the Home Secretary. Also present in this particular meeting was the Secretary, MOCA, Additional Secretary, MOHA Secretary as well, and Gujarat Police, as well as Commissioner of Gujarat, Director of the DGCA, and more importantly, the committee will now rather have access to every evidence and record. This particular high-level committee will carry out an independent investigation. In fact, what we're given to understand is that this multidisciplinary panel chaired by the Home Secretary is mandated to submit its report within 3 months. That was also the directive which was given by the Civil Aviation Minister, and it will focus on formulating standard operating procedures for preventing such occurrences in the future. What we also do know is that the committee's formation, which of course held its first meeting, comes as a separate technical investigation by the Aircraft Accident Investigation Bureau, while they of course continue their particular probe at the crash site, and significant details unfold regarding the same.
Thanks, Nivedna, for those details. Now, FATF has expressed concerns and condemns a terrorist attack in Pahalgam and says will soon release a comprehensive analysis of terrorist financing. Prakash Priyadarshi is joining on the same. Prakash, tell us what are the details?
Yeah, that's an important development coming in as FATF has expressed grave concern and condemns the brutal terrorist attack in Pahalgam. But this marks the third time that the FATF has explicitly condemned a major terrorist attack following previous condemnation in 2015 and 2019. Along with that, the statement also mentioned that this and other recent terror attack could occur without money, could not occur without money, and therefore it has enhanced its focus on effectiveness of measures countries have put in place. A very significant development coming in. FATF has developed guidance on terrorist financing risk to support experts that contribute to evaluation of the 200 plus jurisdictions. And therefore, FATF will soon release comprehensive analysis of terrorist financing in months' time. And this is for the first time that the concept or state-sponsored terrorism is being acknowledged by FATF. This could be seen as a significant development from the Indian government standpoint, as the inclusion of state-sponsored terrorism as a concept note in the report demonstrates international recognition of state-sponsored terrorism by Pakistan. So, a very significant development coming in, and time and again, Indian government has put its stand forward that the Pakistan is misusing funds being provided to the country in procurement of arms, and that is eventually being given to terrorists, and these activities are being used against India. So it's a very significant development coming in. We'll have to see what could be other factors being included in the final report that the FATF will issue.
All right. Thank you, Prakash, for getting us those details from the FATF commentary on terrorism. But moving on, Tata Motors will be in focus yet again after slipping nearly 4% yesterday, as more details have emerged from the analyst meet. Now, the management expects a drop in revenue and EBIT margin for FY26, and also but it maintains its investment plan going ahead. Let's go across to Srishti, who's standing by with all the key takeaways. Srishti, good morning.
Good morning. Well, yes, Tata Motors analyst meet key takeaways are here with respect to their JLR division, wherein the company just yesterday did cut its guidance to 5 to 7% for FY26, wherein the earlier guidance was at 10%, but more details also trickling in, especially on the revenue front, where the management expects the revenue to decline from £29 billion in FY25 to £28 billion in FY26. And along with that, there are many factors that could be at play for Tata Motors. The key among them could be the geopolitical issues and what's really been happening between the tariff-related negotiations that are still underway, because for now the US and UK agreement has recently been concluded, but US and Europe agreement is also due, and along with that, the continuing weakness in the China demand, the USD depreciation against the pound is likely to impact the realizations, and also the BEV demand growth is restricted due to the slower consumption acceptance due to inadequate charging infrastructure is what Tata Motors is highlighting. So these are some of the factors that could hamper the demand and overall financials of the company going ahead. Yes, they have cut their margin outlook for FY26. That's 5 to 7% for FY26. The cost reduction efforts will be at play, as we told you that the investment plan for FY26 and beyond till FY27 under the reimagined strategy stands as it is. No significant changes there, but the company has also come out with their announcements on the new product launches, wherein the top three among them will be the RR EV. The deliveries will commence early 2026. The Freelander EV in Cherry JLR JV in 2026 is something that the company will be looking forward to, and the low volume, high value Jaguar EV are some of the key launches that the company is planning. But indeed, that's the outlook, and the company actually focused on highlighting what factors are already at play for Tata Motors. And yes, the biggest key takeaway is the guidance cut when it comes to the EBIT margin and the revenue target as well, that has been slashed for FY26. Back to you.
Thanks, Srishti, for all those takeaways on Tata Motors. Now, in a positive shift for India's trade balance, trade deficit for May has narrowed to $21.88 billion, and this is down from $26.42 billion in April. The reduction in trade gap was led by fall in imports, which stood at $60.61 billion compared to $61.68 billion last year in the same month. Meanwhile, geopolitical concerns could weigh on the global trade in the West Asia conflict gets prolonged. There will be an impact. To break it down, I have with me my colleague Sumita Karir.
That's right. Government data shows that the trade deficit for the month of May has narrowed to over $21 billion, in this amidst New Delhi's active push for FTAs. The government states that new FTAs with New Zealand, Peru and Chile are being negotiated. In fact, trade growth is also because of the preferential route that's been growing under FTAs and PTAs. Now, that's essentially as far as overall trade is concerned. In fact, the government also stated that it's essentially services exports which have shown resilience and which have shown an estimated surplus of over $14 billion for the month of May, and that's given an overall boost to exports. Overall, the government states that despite global trade headwinds, despite global trade policy uncertainty, geopolitical conflicts, India has done well for its own exports. In fact, there's been positive growth as far as non-petroleum exports are concerned, and it is particularly labor-intensive sectors that have done well. So, for instance, sectors like electronics goods, engineering goods, organic and inorganic chemicals, drugs and pharma, marine products, gems and jewelry, all of these segments have done well in terms of geographies that have done well, while exports to the United States have increased from over $14 billion to over $17 billion, and that's YOY. Other geographies include UAE, Netherlands, China, Singapore. Remember, China is also, while exports to China have increased, but China also remains the top import source for India, and imports from China have also increased. In fact, government sources also suggested with respect to the Iran-Israel war that it's too early to assess the overall impact on trade. However, the government is watching that situation closely, and a meeting of shipping lines, container organizations and concerned departments has been called this week.
Thank you, Sumita, for getting us all those details about India's trade data. But moving on, now we have been bringing you the latest updates on the Israel and Iran conflict. But for more perspective, let's get Srinjoy Chaudhary to explain what are the implications. Will we see a ceasefire, or will the two nations have to fight it out first, as Trump has suggested? Let's listen in.
Well, America has to play a major role because America has some say over Israel. A lot of the weapons that Israel is using is American. But we don't know how Donald Trump, the US president, is going to react to it. Because the President Trump has different views at different times. For instance, when he was in the Gulf, he met MBS in Saudi Arabia, other leaders. The idea of meeting Prime Minister Netanyahu, or even speaking with him didn't even come up. But now, initially then, when the attack on nuclear facilities happened, Marco Rubio, the Secretary of State, said that, look, America has nothing to do with it. Now we know when Iranian missiles are being aimed at Israel, American anti-missile systems, anti-aircraft systems are in operation. What does it mean? That means America is supplying weapons to Israel, and America is actually actively supporting Israel in this war. So if that is so, then America does have a say, and perhaps America may have something important to say vis-a-vis this whole incident. Besides that, the European countries could also jointly play a major role. France, Germany, Britain, Italy, and so on.
Shifting focus back home, Reserve Bank of India has released draft circular or new rules for interest rate derivatives trading on stock exchanges. As per new circular, recognized stock exchanges are now allowed to offer standard IRD products, but they must get prior approval from Reserve Bank of India before launching any new products. My colleague Anurag Joshi is joining with more details.
The Reserve Bank of India has unveiled draft master circular on interest rate derivatives. According to the circular, all recognized stock exchanges are permitted to offer any standardized interest rate derivative products. The exchange will obtain prior RBI approval before introducing any interest rate derivative products, and the floating rate price index used in an exchange derivative is to be a benchmark which is published by the FPA and authorized by the RBI. According to the circular, non-resident may transact in the exchange-traded interest rate derivatives for hedging purposes, and the foreign portfolio investors are permitted to purchase or sell interest rate futures on certain conditions. Stock exchanges are to ensure that users participating in exchanges are adequately aware of the risks, and market makers may do interest rate derivatives deals with non-resident directly or by way of back-to-back arrangement for hedging of interest rate risk. The RBI has also said that the cross-border remittances arising out of interest rate derivative deals have to be reported to the central bank.
All right, thank you, Anurag, for all those details. But moving on, sources have told ET Now that the oil ministry is once again pitched for natural gas to be included under GST, and the ministry has approached the finance minister to build consensus on this. Prakash filed this report earlier. Let's take a look.
That's an important development coming in, as we are learning from our sources that the oil ministry has once again pitched for inclusion of natural gas under GST. We're given to understand that the ministry has approached the finance ministry to build consensus over the issue, as inclusion of natural gas under GST is crucial for bringing clarity to the sector's taxation system. Along with that, the ministry also believes tax clarity is essential to achieve the gas consumption target by 2030, as overall domestic demand is expected to grow on the back of CGD sector's expansion. Therefore, bringing natural gas under GST would be crucial, as it will ensure price affordability for the CGD sector. Along with that, Prime Minister Office is also involved in the consultation process. Inclusion of natural gas and ATF under GST will be implemented in phases. However, states were not in favor of discussing the proposal in December 2024 GST Council meeting. Let's see how it pans out. Will the finance ministry bring proposal? But the oil ministry at this point of time has once again pitched for inclusion of natural gas under GST.
Thanks, Prakash, for those details. TRAI has also released the result of independent drive test conducted in April, which covers 9 cities and highway corridors in 7 licensed service areas. Nivedna is joining in with all those highlights and how it matters to us.
Well, the Telecom Regulatory Authority of India, better known as TRAI, has released the findings of its April 2025 independent drive test covering 9 cities and major highway corridors across 7 telecom circles. Now, let's tell you, these assessments were part of TRAI's periodic quality of service audits aimed at evaluating real-time network performance, and TRAI evaluated both voice and data services. This is across 2G, 3G, 4G and 5G as well for operators. This is including Airtel, Jio, V and BSNL as well as MTNL. Now, the results were mixed. Cities like Palakkad, Varanasi, Cuttack and Jodhpur delivered strong results with call drop rates below 2% and call setup success rates about 98%. Now, data download and upload speeds in the cities were also above average, indicating better user experience. However, performance dropped sharply in parts of Delhi and Bihar and Jharkhand, where in fact call drops exceeded acceptable benchmarks and data speeds were noticeably slower. Let's also tell you what it was looking like in Gangtok and Pakyong, because all operators failed to meet the 98% CSSR benchmark. This is pointing to widespread call setup issues. Now, the drive tests were carried out in various environments, including city roads, highways, and walk zones to mirror real-world usage. We're also understanding that TRAI chairman Anil Kumar Lahoti said the results reflect the ground realities and help benchmark operators' performance. These, of course, insights are expected to guide both operators and policy makers in plugging network gaps and prioritizing future infrastructure upgrades.
Thanks, Nivedna, for those details, and hope we get better service in days to come. But with this, it's time to take a quick break. But don't go away. After the break, we'll bring you all the stocks that matters to you before the opening of market.
Shares that we saw yesterday. It's a Reliance once again that's emerged as the seller via its subsidiary Siddhant Commercial Private Limited. They've sold their entire balance stake of 85 lakh shares at a price of 2,207 rupees. And on the buying side, ICICI Prudential Mutual Fund has bought all of these 85 lakh shares at the same price, 2,207 rupees per share. Moving on from that, Biocon will be in focus. They've opened their QIP with a floor price of 340.2 rupees per share, and the company may offer a discount of not more than 5 rupees to the floor price at the time of the issue. HCL Tech will be in focus. They've announced a strategic partnership with E.ON, one of Europe's largest energy companies, with a distribution network of 47 million customers. So big tie-up coming in for HCL Tech. Positive news there. Macrotech developers will be in news because we understand the Ministry of Corporate Affairs has approved the company's request to change the name from Macrotech Developers Limited to Lodha Developers Limited with effect from 16 June. That was yesterday. NTPC will be in focus. The board will be meeting on the 21st of this month to mull fundraising. ICICI Bank then, on the back of some leadership news, RBI has approved the reappointment of Mr. Sandeep Batra as Executive Director of the bank for a period of the next 2 years. And also Kelton Tech Solutions will be in focus today. The board has approved fundraising up to 69.3 crore rupees via issue of warrants, and promoters will be participating in this fundraise. They will be subscribing to a major portion as well. And with post-issue shareholding increasing significantly, the board has also approved a stock split in the ratio 1:5. So watch out for all of these stocks in today's trade.
Out of the stocks you discussed, my attention was caught by Z Entertainment, and the promoter Z Entertainment is raising its stake in the company to 18.39% from 4.28%. What will be, how does it matter for investors, and how will this conversion help company?
Z Entertainment was in focus yesterday and is going to be in focus today as well, because yesterday post market hours we had the outcome of the board meeting. And remember, Z Entertainment held 2 board meetings yesterday. The outcome of the first one was that they have asked JP Morgan, they have consulted the help of JP Morgan to understand the business fundamentals of their company, how the stock perception is in the market right now, and JP Morgan has suggested some solutions, and that is exactly what the second board meeting was about. The board has considered various alternatives that was discussed by JP Morgan, and after due deliberation they have adopted and approved to enhance the promoter shareholding by issuing almost 16 crore fully convertible warrants to the promoter group entities on a preferential basis. This is going to be done at 132 rupees per warrant. Now remember, SEBI had recommended 128.58 rupees per warrant, but the board felt that the promoter should be putting a little extra in the company to revoke some investor confidence, which is why they've pushed this amount to 132 rupees per warrant. Promoters will participate in this fundraising by investing 2,237.4 thousand crore rupees. So that's a big amount that's going to be infused in the company by the promoters. And on the back of this, it's looking very positive for the company. We also have a word coming in from the management
Mr. R. Gopalan, chairman at Zee Entertainment, he said that the board has deliberated on various solutions provided by JP Morgan. They thought this was the best way to proceed ahead, and this will also ensure that there is added motivation to work in line with the company's objectives. So that is the fundraising news coming in from Zee Entertainment, and the stock is going to be in focus on the back of this news flow.
All right, thank you, Snehi, for getting us all those details about the fundraise. But moving on, a word from the wise now. It is best to have a neutral stance on China. That's the word coming in from Vivek Paul, who's the head of portfolio research at BlackRock Investment Institute. He also talked to us about how inflation is not yet reflected in the economy. Let's take a look.
In an environment where macro uncertainty is just structurally higher. And indeed, it's impossible, again, to my earlier point of trying to guess the next blow by blow in the tariff dynamic. What we should consider, though, is more the broader sort of impacts around this. And markets have played some element of a stabilizing role in the course of the last couple of months. What I would say is actually, moreover, the macro data is probably yet to fully reflect the impact. So even in an environment where, let's say, we have certainty from now on, we're yet to see that come through in the macro data. Recent macro data in the United States points to some of the growth impacts sort of playing out. We're seeing some element of small contraction in terms of the quarterly figures. We've seen some element of a slowdown in CPI, but it doesn't yet reflect the full impact because companies are yet to make decisions. They're holding off on account of uncertainty. Well, for a period of time now, we've had a neutral view around China in the ultra-long horizon. It's not an asset that we particularly call out in our longer-term strategic views because there are some structural growth dynamics that are at play in that country and continue to be so. If we look at the impact of geopolitics that we talked about a little bit earlier, actually China is particularly impacted by the dynamic and the evolving trade rhetoric that's going on globally. If you look at the China sort of trade dynamics, the exports to the United States just in recent months, it's materially fallen relative to where it has been for most of the last decade. So it clearly is having an impact there. What China's doing is it's reorienting its exports to other parts of the global. There's a relative preference for Indian government bonds relative to US government bonds in the long run because we think US government bond yields need to appreciate from here, rise from here, which is a valuation loss for a holder.
Let's also listen to Samir Arora, a founder of Helios Capital, as he shares his list of sectors he's bullish on. He likes the new age tech space and advises to avoid IT sector. Let's listen in.
So I have become very bullish, not just bullish, very bullish. And the main reason for that is that it is very, very clear in black and white that the world's allocation to US stocks is coming down. And I can read and see many, many articles. You can also see flows into ex-US ETFs. That those funds have started picking up and getting $2 billion a week or something, but they used to get zero money before or very little. In our case, anyway, we are also getting some flow. We means market. And initially, we don't need to get massive flows. We first need to stop outflows, which were happening for the last since October. So if the FIS stops selling and then buying a little, and Indians are buying, the market can stop falling and you can see it look at it with optimism. I don't think market will go up a lot. We have become comfortable with all the new age guys even more. That is, the names. So we like them and we like them a lot because also there is although today's your newspaper has a completely, I think, a 3-month-old story, but there has been a reduction in competition in the food delivery and quick commerce sector, particularly the quick commerce side. That is very black and white clear, but maybe the report is 10, 15 days old or whatever. So in general, that we like the insurance selling online company. We like the logistics company. We like all these new age, but otherwise effectively old economy being disrupted with new this thing. Rather than IT. These are not companies like a travel company with everything who happens online. There you still need a lot of logistics part or a delivery part or an implementation part. Therefore, you can't call them tech, but these are whatever you call them, new age tech plus effectively implementing these things on the ground.
All right, Samir Arora is betting on the new age tech sector. But moving on to some more news updates, Prime Minister Narendra Modi lands in Canada to attend the 51st G7 summit. The summit will focus on AI growth, critical minerals and global infrastructure. His visit also aims to ease tensions between India and Canada relations. An Air India flight from San Francisco to Mumbai via Kolkata suffered a technical snag, requiring passengers to deboard during a scheduled halt at Kolkata International Airport. Now, according to reports, the flight faced a technical problem in the left engine, delaying takeoff from Kolkata to Mumbai.
After 7 people were killed in a helicopter crash in Kedarnath Valley on Sunday, the Uttarakhand government has decided to resume chopper service for Char Dham Yatra from today. This comes after Uttarakhand CM Pushkar Singh Dhami had previously ordered a 2-day suspension of helicopter services, and this is to prioritize passengers' safety. And with this, it's time to say goodbye in this edition of Market Cafe. On behalf of Kanishka, me and entire 18 Hour team, thank you for watching.